Hi there, and thank you for tuning in to You and Your Money. I'm your host, Bryan, and tonight's program we are focusing on estate planning. And that is there to offer insights and guidance to help you make more informed decisions. I've deviated slightly from my normal introduction, and when we deal with estate planning, we never seem to have the time to get through all the emails. So joining me this evening are Harry Joffe, Head of Legal Services at Discovery Life, and in the Zoom room from Mauritius is Gordon Stute, Managing Director of Acura. Guys, Harry, Gordon, thank you very much for joining you.
Thank you, Bryan.
Guys, look, I'd like to just discuss this. There's so much happening at the moment with trusts. And South Africans have always been very, very lackadaisical and even run their trusts as if it's their own businesses and things like that. But recently there seems to be a much more hardening approach in South Africa, as it has been for many, many years internationally. So Gordon, my first question to you, those people who have run the trusts, and we use the word sham carefully, but where you've run the trust, how do they clean up everything? How do going forward can they make sure that this trust is not going to be considered a sham and end up having to pay enormous amounts of tax and estate duty because Revenue have said this is not a legitimate trust we need to do? So what can be done?
Bryan, hello. First of all, I think let's just differentiate between what's a sham trust and what's an alter ego trust, because those two often get mixed up. So just quickly, with a sham trust, the question is whether a valid trust has been created at all, and the emphasis falls on the requirements for the creation of a valid trust. So if it's a sham trust, then it actually doesn't exist, and anything that the trust has entered into would be void and invalid. I think what you're alluding to here is what we call the alter ego trust. And this is a valid trust that has been created, but there may be a reason to pierce the trust veneer or kind of go behind the trust and ignore the trust for a particular purpose. I would say to rectify the alter ego trust, all the reasons that made it an alter ego trust should be removed. So an example, if one of the trustees has been given greater powers in the deed than the others, then these powers should be removed. If one trustee is making all the decisions, then the other trustees must become equally involved in the decision-making process.
But Gordon, that's going forward. What about the past? I mean, I come across so many people who've said, I just sign agreeing to anything that the person who's asked me, and as a favor, I've become a trustee, not thinking that it really meant anything. So the individual himself, the settler or the founder, has made all the decisions, bought and sold properties, bought and sold equities, made distributions. And so going forward...
Past.
Huh?
You can't really fix the past, Bryan. You're just going forward. You must try.
But how do you? I'm saying with so many people, and I think you'll agree, Harry, that there's been a lot more questions asked about trusts, information. You've got beneficial ownership now. I'm saying to all the people who do have assets in trust and have not behaved where every decision has been made equally by all the trustees, I want to say to our viewers, how do they avoid that trust being attacked, and particularly being attacked and having to pay estate duty on the assets in the trust?
So, Bryan, just carrying on with what Gordon said, I mean, we haven't had a court case in South Africa yet where the trust has been found to be a sham. Because as Gordon said, if a trust is a sham, then it never existed. And then we've got this problem, what happens to all the assets that were moved in, what happens to all the transactions that were done? So no court in South Africa has yet found a trust to be a sham. There's been a lot of attacks for alter ego where the trust's veneer has been pierced, particularly on divorce and particularly on creditors. We don't have a tax case yet where the trust has been found to be pierced. And there's a good reason for that, because if you look at the tax rates, you know, trusts typically pay more tax than an individual does. The trust rates are higher than an individual. So SARS typically hasn't tried to pierce the veneer of a trust for tax purposes. They've got all the anti-avoidance legislation as well. They've got the Section 7s, they've got the Section 80s that they can throw at clients anyway. So we haven't had an income tax attack by SARS on a trust. You might find an estate duty attack one day. In other words, where SARS says the assets that belong to a trust were actually your assets and we're going to try and levy estate duty on the deceased. We haven't had a case like that yet either. So I'm more worried about divorce and I'm more worried about creditors. And so the answer is going forward, make sure that you quickly tighten up. You can't fix what is done in the past.
But Gordon, if you
Sorry,
do
Bryan,
clean it up, there's no guarantee that going down the line 5 or 10 years later, or even sooner than that, that there won't be an attack on that trust. I mean, Harry just made the point that there hasn't been a case. I'm not talking about tax now, because let's assume all the taxes have been paid accordingly. It's just ultimately to avoid estate duty. Someone put assets into a trust of 5 million, the assets are now 20 million. We know that that growth in those assets will be subject to capital gains, but certainly won't attract estate duty.
But Bryan, so remember, SARS has got the new paragraph 7C, which they passed a few years ago, which in effect stops that freezing mechanism. Because remember, you're paying interest on your loan, or else you're paying donations tax. So I think they're pretty satisfied with the paragraph 7C without having to totally pierce the trust veneer for estate duty.
Yeah, and Bryan, I mean, for them to attack the trust for estate duty, that have to come in under Section 33D of the Estate Duty Act.
Correct.
Which is where they would deem the value of the assets to belong to an individual, but he must have had the ability to have benefited his estate. So it's not a clear-cut scenario.
Correct.
Look, I think if you've done something wrong, like anything, you can't turn back the hands of time and pretend that it doesn't exist. All that you can do is take active steps to fix the transgressions that you were historically making so that you don't make them in the future.
And Bryan, sorry, just to make the point, just because it was an alter ego trust, it doesn't mean it'll automatically be pierced. You know, there's plenty of court cases now in South Africa, particularly on divorce, where even though the individual ran the trust as his alter ego, the fact was that they weren't doing it to defraud creditors or defraud the spouse. And in those cases, the courts have still been reluctant to pierce the trust veneer. You need both steps. You need to be running it as your alter ego and running it with the intention to actively defraud a creditor or defraud a spouse. Only then will they pierce the veneer. So
let me tell you a quick trust I came across a few months ago, is where the individual ran the trust. He did everything. The beneficiaries were 3 children, 1 living in America, 2 living in South Africa. He made all the decisions. The other trustees just obviously signed any resolution that he put in front of them. He's been making distributions, and he's not even a beneficiary.
well, that's of course, yeah. No, I mean, that's not just an alter ego. We're starting to look at far bigger problems here. Because that now, as Gordon's saying, that's going to call into question the whole actual structure of the trust. Is there a trust existing if he's paying distributions to a non-trust beneficiary? I mean, he can make a loan to a non-trust beneficiary if the trustees sign it off. But if he's making a distribution to someone who's not a beneficiary...
No, he's making distributions to someone who's a beneficiary, but he's making distributions to himself as well.
If he's not a beneficiary, now that would call into question, as Gordon said, if there actually was a trust set up. Was there an intention to ever set up a trust? Here we could have history. We could have the first sham case in South African law, because that is a serious problem.
If I can add to what Harry has said there, for a valid trust to come into existence, one of the requirements is that the individual must hand over ownership, management, and control to the board of trustees. If he is not handed over ownership, management, and control, then maybe, as Harry said, we're looking at our first ever sham trust case. Yes, Harry nailed it. He said, well, you could maybe treat it as a loan from the trust to himself, but that's risky for the other trustees, because the beneficiaries could easily query why were loans being made, especially if the loans were interest-free and no security was provided.
Correct.
I mean, I would say in this scenario, Bryan, that the trustees are in breach of their fiduciary duties.
And Bryan, when you get a case in front of a court, you can see it. There's a whole lot of different pegs they hang their hat on to try and see if their trust either is a sham or a veneer, alter ego trust. So here we've got 2 big pegs. We've got the one issue that he's doing everything on his own, which is a big problem, but that would make it an alter ego trust more than a sham. But the fact that he's paying a non-trust beneficiary a trust distribution is a very strong indicator that there was never an intention to actually set up a trust, and we could have something else. The court could characterize it as a partnership or as some kind of other entity, but there is a very big danger that trust is seen to be a sham now. We could.
Okay, so Harry, let me ask this question for our viewers. If you have a trust and you have been doing things, the dangers for trustees is enormous. And secondly, going forward, if you start to regularize things, would that be better than doing nothing?
Definitely. I mean, to answer the second question first, definitely. Once you regularize, at least you going forward, you're stopping the bleeding, as it were. I mean, the danger to trustees start coming in You know, if the individual starts signing surety ships or starts doing things which, as Gordon said, prejudice the beneficiaries, and they've now signed it off, or they, by their conduct, allowed it to happen, then they could well be dragged into it. And the other danger, of course, which we're going to come to, is if there's been issues around non-submission of tax returns or non-submission of beneficial ownership to the SARS and the master, then the trustees are potentially criminally liable and liable for a fine as well. So, you know, you could have a civil liability to the trustee if they're allowing the trust to prejudice other beneficiaries, and there could be criminal liability too now.
And Harry, what about auditing? Auditing trusts that have a property in a trust.
So, Bryan, every trust now, by law, has to submit a tax return. And this is something South Africans haven't picked up yet. Even if the trust is empty, as you would call it, or it's not trading, or it's got no income. But in terms of the SARS requirements, every trust must submit a tax return firstly. With those tax returns, SARS requires other issues as well. They require some kind of financial statement. They require trust resolutions. So auditing doesn't need necessarily to be an independent auditor, but they do need financial statements that SARS will want to see. And please, to our viewers, they must submit tax returns because they're going to be in breach of SARS requirements otherwise.
Gordon, will retrospective resolutions, can they be, will that be acceptable?
Bryan, so the purpose of a resolution is to record, you know, the fact that all the trustees were aware of a decision. And they record this on paper by means of their signature. And actually, so this is where a number of trustees actually get it wrong, because what they do is they go to the trust deed and they look under decision making. And let's say, for example, the deed says that with regards to decision making, the majority shall prevail. So then maybe two, and let's say there's 3 trustees. So then maybe 2 of the trustees are aware of it and they both say, yeah, let's go for it. And they then enter into that transaction. That's wrong. The right procedure is for all of the trustees to be aware of the event or the decision, and then they vote, and then the majority decision would prevail. So I would probably say that a retrospective resolution would be acceptable if the due process has been followed, i.e. all the trustees were aware and the decision is made in accordance with the deed. And then the trustees want to then record this decision in writing.
Okay. Well, guys, we're going to take a short break. When we return, we're going to be talking about joint wills and how do they work. And I'm going to also start dealing with all the emails that I've received in the last month. Stay tuned. We'll be back shortly.